Hi, I'm Debi Peverill, and you're listening to the weekly tip from Painless Financial Training Group. We're still talking about the potential changes that are coming out from the July 18th communication from the Minister of Finance. So today what I'm talking about is the sale of the shares of a small business. The proposed changes in the July 18th communications are that a person who is not active in the business, even if they're a shareholder, will not be able to use the capital gain exemption. Anyone who is under the age of 24 when they sell their shares will not be able to use the capital gain exemption. Any increase in value while the shares were held by a trust will not be eligible for the capital gain exemption. So these rules, if they're implemented, will come into effect in 2018. There might be some benefit for anyone who's getting close to selling their business to maybe sell it in 2017 and get it over with. The climate for small businesses is definitely deteriorating tax-wise in Canada, and maybe you've had enough aggravation. For those of us who aren't ready to sell, though, there's a potential reprieve. They're talking about an election where you pretend that you sold the shares of your business, and the value of your business up to whatever time it's going to be in 2017 would be taxed under the old rules. So the deal would be you file an election, you figure out the value, and now your new cost base will be whatever that value was in 2017. For those of you out there who are in practice as long as I've been, you may remember 1994 when we had the end of the $100,000 capital gain exemption that applied to everybody. What we did at that point was anyone with cottages, rental properties, some investments, again, pretended that they sold those assets at their value at the time, and then didn't pay tax on it because they had the capital gain exemption. And then what happened, of course, when you really did sell those assets, you had the higher cost base, so you paid less tax. So if that's going to be an option for people, then we're going to have to do some education, and we're going to have to do it soon, because sometime during 2018, we're going to have to file those elections. And it doesn't just apply to people who have large amounts of value in their business. Even someone who has a business with a valuation of $60,000, if they're splitting that with a spouse who's more active in the home than they are in the business, then that's $30,000 of gain that will be taxed under the new rules if they don't do the election. And the new rules would indicate that the spouse who's not active in the business won't get access to the capital gain exemption. So we're going to have to take a look at the valuation of all the small businesses and make the elections so that we avoid having to pay tax under the new rules. Of course, I would prefer that the new rules don't go into effect, but it doesn't sound like the government's really listening to all the wisdom we're sending their way, so it's likely that these rules are going to be in effect. So not a good thing that we're going to lose the capital gain exemption for family businesses, but there is still some planning we're going to be able to do.